Hi, welcome back to my channel. We're here again today with Myron Fears, my preferred lender from Guaranteed Rate. I'm Marty Pettiford, your Atlanta real estate expert. We're going to be answering the question that everyone's been asking lately. Is now a good time to buy? So me personally, I feel like if you have a need to buy, let's say you have a life change going on, you need to downsize, or you need to upgrade your home, or you have to move for a job, that's going to depend on your personal needs, if it's a good time for you to buy or not. But let's look at the data and talk to a loan professional, a professional mortgage officer, and look at the numbers to see if it's a good time to buy. So Myron, give us a scenario on today's market compared to, let's just say, the market this time last year.
So yeah, from Marty, thanks for having me again. I appreciate it. I'm glad to be here. So kind of looking at the data, what we're seeing since the summer till now, we're in the late fall now, early winter. And so what we're seeing is that houses were flying off the market. You know, they were going really, really fast. Interest rates were still kind of holding a little bit lower on the lower end, but houses were going really fast. They were still going above appraised values. They're being sold for higher. They were being listed for and things of that nature. Now what we're seeing is they're being sold more so at list price or maybe a little bit lower if you're lucky. We're seeing a little bit more benefits there as far as seller-paid closing costs and helping with the cost and whatnot, but interest rates are significantly higher. So we're seeing almost like a turn, complete opposite of where we were at just a few months. It happened so quick. And so answering your question as far as is now a good time, kind of what you're looking at is like, well, hey, is now a good time to buy or not? Because, well, interest rates are high. I don't want to pay more interest. My personal preference of it is you're never going to be able to time the market. It's just not going to happen, because even though interest rates were lower just earlier this year, you weren't necessarily going to get that house because you had 15 offers on the house. They may be looking at you. You know, the seller might want you to name your firstborn after them to get the house. You've seen so many crazy stuff. But now you're able to really take your time, you know? So I like this market a little bit better because it's a little bit more buyer friendly and it can be a little bit more mutual, you know, as far as, hey, can I get this house? Can I take my time, get all of my inspections? Because I know you have a bunch of clients that typically was like, hey, I don't want inspections because I really want this house. You can really take your time, almost sleep on it, you know, for a night to say, hey, is this the right home for myself and my future? And so I like this market a little bit better. And I think it's still a great time to buy.
Yeah. So like if he was referring to, and it's not just the summer, even looking at it before the summer, 2020, 2021, when interest rates were even lower, it was crazy. 15 offers on the home. I personally got beat out of a house by $70,000. We offered 25 over. Somebody else offered $75,000 over, and they did not get an appraisal. They covered that appraisal gap. So just think about how much money that person paid out of pocket, paying like so much more for the home than having to come out of pocket for that appraisal gap. So all the inspections and actually do their due diligence to make sure that they're not buying a lemon, and to make sure that they're going to actually be happy in the home. Because I'm hearing a lot of stories from people who bought the last couple of years that they actually settled on the home that they got, and they settled because, you know, they didn't have any other options available to them. So that's kind of like a unassociated cost too, in the previous market with the lower interest rates. But let's look at a home at, let's just say early this year, a home that was probably going for $400,000. In that scenario, it would be like the house was going for 400, but you had to offer over, pay so much out of pocket, you probably ended up getting the home for 450 in certain markets. And that's conservative if you like live in California or Texas where they were going like $100,000 over. So let's look at that scenario.
Yeah, so looking at that scenario, kind of like for easy numbers, like looking at that 450 mark, right? That's probably where you're going to end up once you say, hey, I'm paying over list price to get the home, to be competitive, to really entice the seller to accept your offer. That's where we're at the beginning of the year into 2021. Now we're at the point where the house is probably going a little bit closer to the $400,000 range, but your interest rates are a little bit higher. You know, they're going to be a couple ticks higher than where you were at back then. So you're going to see a little bit of a price difference and things like that, but it's not going to be that big of a difference as where you were at earlier this year, because that extra cost of purchasing the home is coming from somewhere. And so that is really close to balancing each other out and being the same price as far as monthly out of pocket, which is the most important thing. Is you're going to be really close to that. And so I'm not really seeing a benefit, especially with some of the clients that say, hey, I'm going to wait. You're never going to be able to time the market, because when prices, now is a great time to acquire homes. You're actually going to find the home now where you may not even got under contract that home in the beginning, to now you're able to acquire, but your interest rate. And that's where you hear the age-old adage of, hey, marry the house, date the rate. Because you're finding things that wouldn't even lasted that long now. And so you really can take your time and find the rate that you have and say, hey, look, I will look at it and reevaluate it in a couple of years, or when the market does come better. I don't know when the market's going to get better. If not,
who knows?
No one truly knows, because we are based off the Federal Reserve and they can change their mind at any point, basically. So you have a couple options too. You can look at buying down the rate. We also have our buy down program where you can actually have a lower interest rate for a certain period of time for you to negotiate that. Usually you can lower it as much to 3% of current rate.
Wow.
So that's huge to really say, hey, rates, I found the house I love, but I can get that rate like it was in 2020, 2021. So that's a great program that we actually just came out with this week. So I like my buyers being in that program, and it's at little cost to them. Or you can permanently buy the rate down. So you see quite a bit of things that we're making it easier for the buyer to get the home they love at the rate that they love to.
So, and adding on to that, now because you can buy those rates down or do a buy down program, you can actually, because there's less competition on the market, homes are staying on the market longer, you can negotiate that the seller pays for that now. So that's really a win-win situation. So you can get the seller to pay for that lower rate. Let's just say you do the buy down and you get 3% or 2%, even 1% better. You know, your payment is going to be lower for a specific amount of time. Or you can choose, like he said, to permanently buy down that rate and just get, and then throughout these programs, if the rate's lower, you can still refinance.
Exactly. And I'll be the first one to call you. And I tell all of my clients, even now, hey, I will be the first one. You don't have to watch it. I will take care of all of that for you up front. But that's where you're going to see the most bang for your buck. The more you can say, hey, I can leverage these programs that are built for me, the better I am for my financial goals. Because when you do the numbers, and we'll break it down for you, when you do the numbers of your 5-year costs, that's where you'll see, wow, doing these certain programs as far as buying down the rate or leveraging these different programs to get the rate lower and save me, that's where you'll see the biggest 5-year savings. Because statistically, you're going to be in your mortgage for about 5 years. It's a little bit less, but about 5 years for easy numbers. Outside of that, when I say you'll be in your mortgage, you'll either move because you don't like your area, you'll move because you need more space or less space, or 2, rates can go up or will go down within that 5-year mark. I mean, again,
hopefully it's not going to go up continuously for the next 5 years.
And again, just think about where we were just at a year ago. We were solidly in the 2s to 3s, and we weren't even thinking about we would be where we're at now. And so that's one of the things where leveraging these programs that are built for you, built to help you and save you money at the end of the day, that's where you'll be best off.
So it sounds like to me, this is a better market, because especially if you add these programs into the factor, because homes are on the market longer, you're able to do your due diligence to get the house you really want. You can get it at a lower purchase price. You can get seller paid contributions that in turn can lower down your interest rate and get you at that point where we were last year, or even last year is extreme, but to get you where we were at least in the summer when we were in the 4s. So that is great information. So Myron's going to do some examples. We're going to shoot over to that screen so you can see exactly what those numbers are going to look like. So stay tuned for that.
We've talked to you briefly about how to pick a lender and how to get pre-approved. So now we're going to take that next step in structuring your offer on your new home. So right here, what I have here is a calculator that I have created that I send out to all my buyers and even my agents to help them make an informed decision. On this specific scenario, it will go down all the different types of offerings that you can. This typically will happen between right before you make an offer or just after you get under contract, depending on how the deal is structured. So in this scenario here, we have a purchase price of $400,000, which is pretty common in this area. We have a down payment of 5% on conventional financing, which will come out right out to $20,000, and a loan amount of $380,000. Okay, and this will be a 30-year fixed rate mortgage. So right here on the left-hand side here, we have a base of $400,000, just like above, $380,000 loan amount. As of today, interest rates are hovering right around 5.75, but always call and get the interest rates of that day. We have a term month of $360, 12 months times 30-year mortgage, and that will give you a payment, principal and interest of $2,217.58, which will give you a 5-year total loan cost of $133,054.61. So that would be our base right here on this column, the far left-hand column. Commonly, if how we're structuring the deal, you will see common in this market, you want to negotiate a little bit as far as called a price reduction. So on the price reduction, I have a scenario here where on the price reduction, we're going to negotiate $10,000 off the sales price. So that will give us a purchase price now of $390,000, a loan amount of $370,500. The interest rate will remain the same at 5.75%. Still 30-year fixed, and it will change your payment just slightly to $2,162.14 there. Okay, we will have a monthly savings now with our price reduction at $55.44, which will give us a total 5-year cost of $129,728.25. And then which will give us a 24-month, a little bit shorter time period, a 2-year period savings of $1,330.55 off of our base price. Next options me and my clients go over is if we bought the rate down. I call it a permanent buy down. You'll hear buying points, buying the rate down. It's all you're paying to get your 30-year fixed interest rate lower than what it is today. So on this same scenario, this would assume we do not do any price reduction. We just buy the rate down. So the base purchase price will still be $400,000. The loan amount will remain $380,000. But on this, the change here will be the interest rate. We would pay it down 0.5% to 5.25. It will still be a 30-year fixed. The payment will go down a little bit more than the price reduction here. It will go down to $2,098.38. with a monthly savings from our base of $119.20 over the 30-year term period, which will give you a total 5-year cost of $125,902.45, or a short time period of 2-year savings of $1,430.43. One thing I failed to mention is that we operate in that 5-year loan cost in that 24-month savings period, just because statistically you're in your current mortgage for only about 4 to 5 years. Meaning in that current mortgage, you may decide to move, refinance, you may not like the area or anything like that. Statistically, it shows us a 4 to 5 period time mark. Now I can adjust this calculator slightly if we need to exemplify a longer time period depending on your situation. Now, returning back to up top of our outside of our base, price reduction, and our permanent buy down. The next scenario here, which is kind of coming, it's always been around, but it's kind of getting a little bit more steam with the rising interest rate market, is your buy down programs. So your buy down programs, how those work is they will have a set period. Typically, it's between 6 months to 12 months time period of where your interest rate is lower than the current rate, or if you locked in your rate at that time period. So meaning, for example, here, if the interest rates are at 5.75, that interest rate will be a term period lower than that base rate today. It is paid by the seller or the lender as a subsidy. So your 30-year amortization period is still at that base rate at that 5.75 or wherever the rates are at that time period, but you have a subsidy through the seller or the lender that helps get that interest rate lower. So on this scenario here, we have multiple at guarantee rate. I'm doing a common one of the 2-1 buy down programs. Now we do have another program that has a 3-1 buy down. So on this scenario here, the 2-1 buy down, the first 12 months payments that you have on your mortgage will be 2% lower than your base rate. And then the subsequent 12 months will be 1% lower. So on this scenario here, the first 12 months will be at 3.75 and the subsequent 12 months will be at 4.75, and then after that period, it will return to that 5.75 as 30-year amortization is fulfilled. So on the scenario here, 400 purchase price, 380 still loan amount. The interest rate for 12 months will be 3.75. It is still a 30-year fix or 360 months, but the payment goes down quite a bit to $1,759.84, which will give you a total savings of $457.74 for that first 12 months, which is quite a bit higher than the permanent buy down and the price reduction. Now, I know one of the questions is, hey, where does that look like though if my rate's going back up? So that is why also in this scenario here in this calculator, that helps to kind of visualize the shorter time period as well, because again, statistically, you're in your current mortgage for 4 to 5 years. So looking at this scenario, we're looking at we're going to go back to our 5-year loan cost total with the rate changing still 3.75 the first year, 4.75 the second year, and then 5.75 all the way up until the 5-year mark. Your total cost would be $105,590.36. So quite a bit, almost a $20,000 difference compared to your permanent buy down. So quite a bit more savings even with that 2-year period, because it's so front loaded on your savings on the 2-year period. It still outpaces the permanent buy down. And then on our 24-month savings department, we're looking at $10,985.70 compared to our base 24-month savings department. Even compared to our permanent buy down or our price reduction, you're seeing about an $8,000 difference in savings. So that is why this program is really, really popular right now. It's beneficial for our buyers. Obviously, the numbers speak to that, but it's also beneficial to sellers as well, because typical this 2-1 buy down on this scenario here is going to be very close, a lot of times cheaper than your price reduction. So how sellers can see it is, hey, I'm going to save a little bit of money by just offering a buy down program compared to doing the price reduction. It incentivizes buyers because to save almost $450 on a monthly payment for the first 12 months, incentivize buyers to say, hey, I'm okay with rates being higher right now. I have this buy down program in my back pocket to utilize to save money, with the expectation that, hey, interest rates will go back to some normalcy or will even get better within that 2-year department. Even if it stretches and that interest rates do kind of stay a little bit on the higher end to the 5-year mark, you're still in a good spot, depicted by a 5-year cost standpoint. So it's almost a win-win. It's a true win-win for your buyers and sellers. That's why this program is being so beneficial right now. It's underutilized, but that's why we push for it a lot. And I try to structure it with any deals I have going forward.
So those are what the numbers look like. And I'm so thankful that Myron was here to explain that to everybody, because the media is doing a lot of fear mongering right now. People don't necessarily believe the experts when it comes to that, because they're just saying like, oh, we just want the commission or we just want to make a sale. But when you look at the data, you can't deny it. Now, granted, you might not be in the place where we were last year, but there are pros and cons to every single housing market. And it's up to you to determine whether it will be a good fit for you to take advantage of the current market or not. So thank you for joining me today, Myron, and bringing us all that good information. If you want to learn more about applying for a loan or what your specific mortgage rate will look like for you, Myron's information is in the description below. And if you want to get in contact with me, my information is in the description below also, but you can follow me on all social media platforms at Marty Loves Homes. See you guys next time.